Good evening. This is the Elliott Wave update for the S&P 500 for Wednesday, January the 26th, 2022. Let me start by saying the streak for volatility continues, and that continues to produce extremely awesome and profitable trading days. Excuse me. The S&P did catch some buyers pretty much off of the low we reached on yesterday's close was 42.96. Microsoft came out and reported their earnings. Initially, the stock dropped an additional $16 from the close where they closed, but by the time Globex was ready to open, the stock was being quoted higher, and it moved substantially higher from the start of Globex in terms that the stock closed at 288. The first bid that I saw once Globex was 280. The second bid was 290. The third bid was 295. And then it was off to the races. So we got a very strong rally off of that low from yesterday afternoon on the close. That rally continued. We saw it pick up speed in the Globex session. And then as we opened today, the initial move was to pump it up just a little bit. We got up to a high at 44.37. The market then dropped down very quickly to 43.81. Then we rallied again in anticipation of the Fed news. And when that news came out, the first reaction was that's great. And the S&P rose up to 44.46 before again turning lower and then getting crushed. Now, on an Elliott basis, it all fit very perfectly. And let me show you where and how. From this level at 42.13 or 12.75, we were counting minor fourth wave correction. I had originally placed the 4 here because it was 3 up and the market has started to come back down again. However, we got this rally, we got that decline, and we got another rally. So really what this does begin to show is this is wave A, this is B, 1, 2, 3, 4, 5. And that was wave C. So this makes a nice complete minor wave 4, which leaves us with a minor 5th wave down in progress right now. Globex has just opened, and once again, we're seeing that same type of action where they're willing to step in and just buy these futures. I'm not sure in anticipation of what. We continue to have earnings reports coming tomorrow, so maybe they're thinking that's something. But Tesla, which originally did report this afternoon, dropped from 937, which was the close, to 882, I believe it was. Then it rallied all the way back up to 960 pre-Globex opening, and it drifted back down to 930. Now it's trading at 936-ish. And that doesn't really suggest that they should be running the NASDAQ up 78 to 80 points, but they are. So again, we're getting that type of a bounce, which could lead to some strength showing up as Globex rolls around the globe before it gets back to us. But what I am now going to interpret this as is that we're in a minor 5th wave down. That minor 5th wave is going to consist of 5 waves of minute degrees, similar to what we saw here in this 3rd wave. Now, being that the 3rd wave was the longest and the strongest, I'm not expecting this to be in competition, but I am expecting it to accelerate at certain points, which it did in the 1st wave. So if I'm going to count this as minute wave 1, minute wave 2, where can minute wave 2 get up to? That's 46. This is, so we got up to 44 and we dropped down to about, we dropped down quite a bit actually. 44.46 was the high, and then it dropped down to, it's 43.46, and then we got another, so it was about 150 points that the rally dropped. And if the rally comes back 40, it's going to put us, well, actually, we're a little bit higher than where we are. So we could go up to the 50% level, which is going to bring us back up into this area. So we have 43.62, and then we have 43.76, and that goes to 43.80. And I think that that should contain it, but because that's where the 8, the 20, and the 50 all are combined and clustered together right in that 43.75 to 43.80 area. So that's why I would suspect that we're going to start to find some stiffer resistance to get through. A break there will push this market back up towards this high. Now, if it gets up to that high, it's not going to be very easy to count out, but I will. And it would suggest that we are heading higher, and this correction may or may not be over. I suspect that it is, but we'll have to wait and see. So I'm not expecting this rally to really pick up steam like we did yesterday and just push. So I would think we might get up there, the bounce is over, then we start to decline again. Now on the way down, we have no moving averages, so they would all get lined up again to show us going down. So what we have is we have price support at that 294 area. We have price support at that 288, 289 area, and then we break. So there'll also be some price support at 42.52, but we'd be looking for wave 5 to break the low of wave 3, which was at 42.12.75. So it needs to break below 42.12. So our first support for this fifth wave is going to come in at 41.85. Then you're going to notice that we kind of start to drop into a black hole. But let me fill in that move for us, because now that we have the top of wave 4, I'm going to add Fibonacci retracements that will go right up to that high. And that's not going to come in right. Let me just make a slight correction because I'm about 4 points off. Yeah, good. And the endpoint is 42. What now, computer? All right, so now my computer is frozen. No, why won't it work? All right, cancel that. Let's try it again. And I apologize because this takes up precious time and then adds it all to the thing. There we go. 42.46.25 is there. I'm going to say okay, and that brings us up just a little bit. So we have very light support at 43.19 on the way back down, and then we have that low at 42.94. Then we have 42.42. Then we have the previous low at 42.12. Then we start to fill in some blanks with a 50% of 41.75. But the most likely area that's going to drop and contain this fifth wave would be 41.17, 41.18, right in that area. Potential to drop lower puts that zone from 41.17 down to 40.28. So that's a fairly large zone, almost 100 points. And where wave 5 would equal wave 3 would be down here at 39.15. This all remains in the picture. If our selling gets intense again, as we've been seeing, the volatility is really jacking prices around and really moving these markets. So if that gets started again, then I would expect that we could start to break and get ourselves down here before all is said and done. Right now, I'm going to be looking for it to break below the previous low of wave 3 at 42.12 and get itself down to 41.17. So that would be, another 100 points or so, less than 100 points, down to the 618, which is the most common area for, or Fibonacci retracement for wave 5 when compared to wave 3. So upside, I think, should be held below 4,300. Below 4,400. Boy, get my numbers right, huh? That's how fast these markets are moving. So below 4,400, but I'm feeling that it could just kind of get stuck right here at that 20 and the 50, all kind of jammed up right around 43.76 to 43.80. and then turn lower again. It's going to find support at 43.19 and then starts, if we really start to break, we'll start to break below all these levels. Again, these are just resting points. These are not completion points. I really truly expect it to start breaking these levels. This would be a completion point. A new low, whether it be as little as 41.79, which is where the 50% level is, then, or then that would be acceptable as long as I can count down 5. I need to count 5 waves down to complete the 5th wave. But so that brings us into this zone, which is more than likely going to be the completion zone. Once this 5th wave is done, it's going to complete the first 5 waves of minor degree down. And whether that is going to turn into an intermediate A wave or an intermediate first wave, we'll label it accordingly and make our adjustments as the next wave unfolds. But once that 5th wave is done and that intermediate wave A or 1 is complete, I'm looking for a very substantial rally. So again, they might just be early trying to pump this up now versus letting it drop and then everybody just going to jump back in and the market will move quite substantially. We'll be able to put Fibonacci retracements on that. So it's either going to be a B wave or it's going to be a wave 2, both of which will consist of an A, B, C, but it will be an A advance, B decline, C advance, and it's going to be of an intermediate degree. So it should be pretty good. Great trading, good volatility, et cetera, should continue. So I'm going to leave it right there. We'll keep things a little bit on the short side today. Again, if the volatility continues, you must stay in a good, clean mindset. You must be able to take out all the distractions. But remember, we're focused on the price action and the moving averages and the support and resistance levels and the Elliott count, which is going to help us guide a trade. Also, just having a knowledge of Elliott, that if we drop into a 3rd wave, which I believe would come next after this slight rally, then that should be the longest and the strongest. So I'd be looking for some acceleration again. Again, I'm looking for this, maybe provide a pause at these support zones, but I would look for them to be broken, with this zone being the more likely candidate to complete the move. All right, I'm going to leave it right there. Our next update will be on Thursday, the 27th.